So welcome to this series. Today, as I said, we are going to discuss two different papers. Today, I'm planning to do the section A part, right, from two past paper. And another session I will do completing with section B and C, which is prepared by myself. So let's start without wasting time. So very first, I'm going to discuss about July 2023 paper, right? July 2023 paper. So from this paper, we are going to discuss about section A. It's about MCQs, but here they say objective test questions, right? So there are few MCQs. You can see there are few MCQs. And fill in the blanks, true or false, and some of the answering questions. Okay, each carrying 2 marks. So totally 40 marks given for you all. So very first we will start from first question. Which one of the following is the reward for entrepreneurship? So it's from the chapter 1. As you know, there are 4 factors of production. They are what? Land, labor, capital, entrepreneurship. So while these factors are used in the production process, the reward should be given back to these resources, these factors. So they are asking for entrepreneurship. So entrepreneurship to use, we have to give back profit. There are 4: land, labor, capital, entrepreneurship. But anyhow, land, we give rent. Labor, salary is given. Capital, interest is given. So entrepreneurship, profit is given. So according to the answer, third one should be the most suitable answer for 1.1. So 1.1, the answer will be profit. Right? Answer will be profit. Okay. So number 2, it's about 1.2. Which one of the following statements is correct regarding the indifference curve? So indifference curve, it's about a downward sloping curve, rectangular hyperbola basis like it comes. So it says about each point in the indifference curve, satisfaction what the consumer receive will be same. So whatever the combination he can consume, right? For an example, so if this is the diagram, so 2 different goods are combined together and it will be consumed. So at the time, if we draw the indifference curve, okay, if we draw the indifference curve, whatever the point is chosen, okay, each and every point chosen along the indifference curve gives the same satisfaction. Okay, so here the different combination, okay, X and Y good. So X and Y good, they are going to utilize in the different combination. But finally the satisfaction, what the consumer is going to get from these 2 different good combination will be same. So if they have more income, okay, if the consumer has more income, more goods can be consumed. So more goods can be consumed means the satisfaction will be increasing. So increasing, it will be shifting to rightward. It will be shifting to rightward, but it never intersect each other. Okay, it never intersect. Okay, so if the income level becomes lower, right, then the indifference curve shifting downward. Okay, shifting downward. But whatever the curve you take into the consideration, along the curve, its satisfaction is same. So here any of the combination they can take, but the satisfaction is same. But the satisfaction will be increasing if the indifference curve will be moving upward. If indifference curve will be moving downward, the satisfaction received by the consumer will be decreasing. But along the curve, the satisfaction is same. Okay, along the curve, the satisfaction is same. Right? So accordingly, which one of the following statements is correct regarding the indifference curve? Let's see. Two indifference curve intersect with each other. Did I draw intersecting each other? No. So the answer is wrong. Number one. It slopes upward from right to left. No. It slopes downward from left to right. Okay. It is a different combination of two goods. Okay. Different combination of two goods that provides a person the equal satisfaction. Is my argument correct? So indifference curve, okay, the indifference curve. So each and every indifference curve provides equal satisfaction and the different combination of goods are consumed. And fourth one, it is used to identify the market equilibrium of the commodity. Nope. So the answer is third one. Third one. Why? Two different combination, two goods. Okay, sorry. Different combination of two goods, but that is providing equal satisfaction. Okay. Different combination of two goods. Okay. Whatever the combination you can take. But along the each indifference curve, the satisfaction will be same. But if the indifference curve moving upward, satisfaction will be increasing. Moving downward, satisfaction will be decreasing. But along the curve, the satisfaction remains constant. It's same. The answer is third one. So 1.2, third one is the answer. Okay, third one is the answer. So it is a different combination of two goods that provides a person the equal satisfaction. Okay, so 1.1 we did and 1.2 we did, and I said we are discussing about July 2023 paper. So the students who joined late, please consider I'm discussing about right now July 2023 paper, the section A, objective test questions, right? Okay, the first 20 questions now I am discussing with you. Okay, right, now 1.3. So let's discuss about 1.3. If the coefficient of the cross elasticity of demand between commodities A and B is positive, right? So cross elasticity of demand. So cross elasticity of demand, it compares two different goods. We say cross checking. So cross elasticity of demand compares two different goods, right? So one goods price and another goods demand are checked, considered. So one good price and another good demand are considered. So if there is positive, there are three different types. So one is positive, another one negative, another one zero. So positive says about substitute goods. They are the substitute goods. Negative relationship says about the complementary goods. Complementary good, and zero, it's about non-related good. Okay, non-related good. So positive relationship given for substitute good. So one good price increases means we do not buy the certain good, we shift to buy another good. So both are related. Related means substituted here. One good is substituted for another good. So positive relationship. The answer is what now? For 1.3. Substitute goods. Okay, 1.3. The answer is number 1. Substitute goods. Right? The answer is what, darling? Substitute goods. So 1.3. Substitute goods. Right. So 1.4. Okay, 1.4. When the price of the commodity X increases, okay, it's about mathematical presentation from elasticity concept. So when the price of the commodity X increases from rupees 100 to 120 rupees, the quantity supplied, okay, then it's about elasticity type and the supply. Demand, we discussed about what? Price elasticity of demand, income elasticity of demand, and cross elasticity of demand. Supply, we have only one type, it's about price elasticity of supply. So price elasticity of supply, how did we consider? It's about price elasticity of supply. They said about the quantity supplied for that commodity. So they are expressing with the word quantity supplied. So it's about price elasticity of supply. So when the price of commodity X increases from 100 to 120, okay, 100 to 120, the quantity supplied for that commodity increases from 1000 to 1100. The nature of the price elasticity of supply would be, okay, the nature of the price elasticity of supply. So we have to find through the mathematical presentation, right? So price elasticity of supply, delta QS over delta P into P over QS. So change in the quantity supplied over change in the price into price over QS, right? Here the change, so the change should be with plus or minus sign. So here delta QS, they said increases from 1000 to 1100. So the change is 100. Accordingly, the price change is 100 to 120. So the change is plus 20. Okay, so what is this P and QS? Okay, don't forget, always take the very first price given and its quantity supplied. Okay, very first price and its quantity supplied. So what is the very first price? 100 is given. So the very first price is 100 because the change comes from 100. So the first price, the base price, the fundamental price is 100. So for the 100, the quantity supplied is given 1000. Okay. So now 1000 is given. So what's the answer? So 1 over 2. So if I am correct, 0.5. You can check. You can check. Answer is 0.5. Am I correct? Yes, 0.5. So it's less than 1. Am I correct? Price elasticity is less than 1. So there are 5 types we studied under price elasticity of supply. So one is perfectly inelastic, 0, inelastic less than 1, unitary equals 1, elastic greater than 1, perfect elastic infinity. So since 0.5 is less than 1, it should be inelastic. According to the answer is number 2, 1.4. The answer is number 2. Answer is number 2. So up to now, check whether the answer is correct or not. This one. Yes, plus 0.5. Then let's go to 1.5. Okay. So remember, in your MCQ, one question is compulsorily tested from Central Bank annual report. Right? One question, it's about MCQ only. One MCQ is tested from Central Bank annual report. So we can't use 2023 because it's not yet published. So we have the recent data from 2022. So if you analyze the past papers of AAT, two things are taken to the paper often. So one about the GDP rate. So one they can ask, now we are going to use the 2022 because 2023 is not yet given to us. So we can't use the perfect information. So the 2022 Central Bank annual report is used. Accordingly, two will be tested. So if you analyze, you can see one is the GDP rate. So according to GDP rate, according to 2022, it's about minus 7.8%. Okay, GDP rate minus 7.8%. Another one, it could check the per capita income. It's not capital all the time I say about that. Per capita income. So per capita income means each head. It means each person. How much worth of real GDP is received? Okay, how much worth of real GDP is received for each person? So it will be given by USD dollars. Okay, it is given by USD dollars, right? So according to 2022, it's 3474. Okay, 3474. So please remember these two. So according to 2022 Central Bank annual report, GDP rate is minus 7.8% and per capita income is USD. It means US dollar 3,474. So let's come to 1.5. It's about, according to the annual report of Central Bank, the economic growth rate. So the fourth one is the answer, if I am correct, because it's minus 7.8%. Right, minus 7.8%. So 1.6. Which one of the following is an instance of a negative impact of economic growth? So economic growth means it's about the continuous improvement in the productivity. So if there is an increase, okay, if there is continuous increase in the productivity, so you can get many advantages. Meanwhile, there are some negative impacts. Okay, so increase in the rate of employment, so more jobs, yes, good thing. Enhancement of investment, local, I mean the domestic investment and foreign investment are attracted, good thing. Increase in current level consumption, right? So if current level consumption is increased, more of the resources will be utilized to fulfill the current consumption. So if the resources are used for the consumption, they are unable to allocate the resources to produce capital goods, which will facilitate the future productivity. Capital goods, okay, building, machinery, airport, airway, harbor, schools, hospitals. So these all are the capital goods. So in order to produce them, we need resources. So if we use more resources for the consumption, if the consumption level is increasing, we are going to use more resources. So in the future, we are unable to consume the goods, because in order to produce the consumer goods, first we want to produce the capital goods. So it's another negative impact of economic growth. Increase in the standard of living, yes, we can get more goods, we will enhance our standard of living. Right, therefore the third one is the negative impact. Okay, increase in the current level consumption, right? So third one will be the answer for 1.6. 1.6. Okay, next one, movement of supply curve. Movement of the supply curve to the right, okay, shift, okay, to the right as a result of the change in any factor that influence the supply of a commodity except the price of the own commodity. Remember, we can classify the factors affecting or determining the supply into two. One is the price of the concerned good, another one is other factors. Under the other factors only, number of things we take, okay? Like the government tax or government subsidy, cost of the production, technology, number of suppliers, likewise we take. So if price of the concerned good is changing, the change comes along the supply line. The change comes along the supply line. The change comes along the supply line. So like here, like this. Okay, so we say it's about what? Extension of supply and contraction of supply. So we can say it's about the extension of supply and we can say it's about the contraction of supply. But they asked about movement to the rightward. So when you come to this thing, so this is the original supply means moving to the rightward, moving to the rightward. And also there is a possibility to moving to leftward, moving to leftward. So if supply line is moving rightward, okay, so when you draw the rightward movement is known as increase in supply, leftward movement is known as decrease in supply. So they asked about this movement, not upward along the supply curve, not anything about downward along the supply curve. It's about the movement to the rightward. So movement to the rightward. So contraction of supply, no. Expansion of supply, no. Decrease in supply, no. It's about increase in supply because it's about the rightward movement. So 1.7. The answer is fourth one. The answer is fourth one. Answer is fourth one, 1.7. Okay, now 1.8. Which one of the following is correct regarding a firm in a perfect competitive market? Actually, there are 4 types of market we learned. One is about perfect competitive, another one monopoly, another one monopolistic competition, and the last one is about oligopoly. Now we are going to discuss about, this question is related to the firm in a perfectly competitive market. Okay, here there are a large number of buyers and sellers in this market. Then each seller is a price taker because the goods which is sold, okay, the goods which are sold in this market are homogeneous, right? Okay, homogeneous, they are similar, identical. So they can't express anything different to another supplier. So he cannot influence the market individually. So he is a price taker. So let's see according to this, which is the correct statement regarding to a firm in this perfect competitive market. Very first one, it makes normal profit in the long run. Yes. Okay. The first one is the answer. Why? Short run, long run, we discussed about short run. A firm in the perfect competitive market can enjoy abnormal profit or normal profit or loss. Negative profit. Loss means what? Negative profit. But when it comes to long run, a firm in the perfect competitive market, it earns normal profit. Okay, in the long run, it can earn only normal profit. But in the short run, there are 3 chances, okay, options that it can earn or enjoy. One is the abnormal profit or a normal profit. But loss, it's not about enjoying. We can say suffer. Right? Anyhow, number 2, let's see. It can determine the price. Nope, he is a price taker. No close substitute. Never. Why? The goods are homogeneous. They are perfect substitutes. Perfect. For an example, vegetable market. If you take carrot from one seller and a carrot from another seller, can you differentiate? They are similar. Perfect substitute. The factors of production of the firm cannot easily move to another firm in the industry. Not like that. They can easily move because the character is from the nature, right? Okay, so easily you can shift. right? Then the first one is the answer for 1.8. 1.8. First one is the answer. So let's go to 1.9. 1.9. Right. Which one of the following is not a function of money? Okay. So what is money? General acceptance, I mean, which is generally accepted by public to use in the medium of exchange. Like you can say, there are the characteristics of a good money and there are 4 functions of money. Can you all remember? Medium of exchange. Yes, unit of account, store of value, deferred payment. Okay, supporting to settle the deferred payment. So here store of value, a measure of value, medium of exchange, they 3 are correct, but relative scarcity. Actually, that's the answer because it's not a function. It's the characteristic, one of the characteristics of good money. Relative scarcity, it's limited, shortage. Okay, comparing to the wants we have, right? So that's the characteristic. So number 1, number 2, number 4 are the functions, but the third one is the characteristic. So then it is not the function of money. So we can say third one is the answer, right? Third one is the answer. Relative scarcity, it's not the function. Okay, right. 1.10. Okay. A manager of a business has identified the following costs in relation to his business. Okay, I did one question at the class. Okay, how to find direct cost, indirect cost, like under the theory of production. So the cost of production. So one is about the direct, another one is about indirect. So direct we can say, I mean the cost, okay? Because it's about the cost, we can say explicit cost. So we can say explicit cost for direct and implicit cost for indirect. Okay, implicit cost for indirect. So direct cost. So what is the meaning of cost? So whatever you sacrifice to do the production process effectively, anything you sacrifice. But here under the direct cost, you sacrifice money. So if the statement is given with paid, given, okay, expenses, spend, likewise spending or paying, likewise any wordings are given, they are about you are spending money. But implicit means indirectly you are sacrificing the value from the own resources. So you are here sacrificing the benefit from the own resources. Like for an example, okay, so if this building is mine, example only, if this building is mine, so if I plan to do production process here, the rent income, what I could get from this building, I'm going to sacrifice. Own resource, I said. That's what example only I said. If this building is mine, I could do my production process, so I can rent this building for third party. So if I decide to take production process, continue, I can't give this building for rent. So the rent income, what I can get from the own building. Okay, likewise, anything you sacrifice from your own resources to do the production process, they are known as indirect. Okay, now let's see what's the question given. Wages paid. Wages paid. What is that? Paid. Wages paid. So how much wages paid? 1,000 paid. Purchase of raw material. Oh, correct. Purchase. So when you purchase, when you acquire something, when you get something, you have to pay money, right? So purchase of raw material. How much? 2,500. Economic depreciation. So what is the meaning of depreciation? Actually, the value what you get to the production process is the amount depreciation. For an example, I use the assets. So if they are mine, okay, dear. So if I use my own assets, I can use my own building, own machineries, own furniture fittings, own motor vehicle. Likewise, if I use my own resources to the production process, not for my personal benefit. Okay, so it's for the business. So when I use my own resources to the business, so the value will be declining. So can you see how much value visible? Are they visible? No, but indirectly you are sacrificing. You are giving the value from your own assets. So economic depreciation is the implicit cost. It's about 500 and interest income forgone. How the interest income forgone? Can you do the business with free of charge or with magic? No, you need an investment. You could use your own money from your bank deposit. So when you withdraw money from your own account, the interest income, what you could get from that deposit, you are going to sacrifice. So it's about what? Indirectly, you are sacrificing some benefits to do the production process. Okay, so forgone. So if any words come with forgone, sacrificing, giving, losing. Likewise, if you say it's about the indirect cost, so according to this, interest income is 300. Okay, now the question is what? So what I did is correct. So they are asking the total of direct and indirect. So total here 3,500. Direct answer. Direct cost answer is 3,500. Here it is given 800. According to this, 3,800. So what's the answer for 1.10? Second one is the answer, right? So number 2 is the answer. Number 2 is the answer. 1.10. Are you all understanding? Can you all recall the things what we discussed under the theory of production? I think I did one question here, the direct cost and indirect cost. So this is another way how you can recall the theory. But many of the things are tested like this. So please revise the things from here and elasticity. Very beginning, the concept regarding this opportunity cost, choice, scarcity, likewise. Okay, so remember those things and go. Cost of production, right? We did about. Now other thing is about other two are fill in the blanks. So let's do 1.11. 1.11. Employment is a component of micro or macroeconomics. Yes, very first day we studied about what is economics and what is microeconomics, macroeconomics. So micro about dividing the economy into number of parts and analyzing each unit carefully, deeply is about micro. So it's about the demand theory, supply theory, production cost, revenue, okay, market. So likewise you can say. But macro, it's about the entire nation, right? Okay, you are not going to split anything. You are going to take the entire nation, right? So the entire nation according to the national level phenomena. Right, national level occurrences. So employment about national level occurrences. So it's about one type of national level phenomena. So is it micro or macro? It's about what? Macro, right? It's about what? Macroeconomics, macro. So answer is macro. 1.12. Decrease in the consumer income, right? Decrease in the consumer income is a factor to shift the demand curve to the right. If consumer income decreases. Very first tell me, consumer income is what? Price of the concerned good or one of the other factors? It's about one of the other factors. Okay, same theory how I explained the supply. So it's about the shifting the line. So favorable answer means it will be shifting to rightward. So downward sloping demand line. So if you take the downward sloping, so decrease. Decrease means you have no income. You have no income. Are you willing to buy goods? No, your willingness will be declining. So it will be shifting to leftward. Okay, it will be shifting to leftward. Suppose you have more income. More income. So you can increase your willingness to buy. Therefore, decrease. Decrease to which side? Left. So don't forget it. Remember carefully. Left side comes for unfavorable changes in the other factors. Unfavorable. They are not good to feel for us. But if there is any favorable change, demand line will be shifting to rightward. So decrease in consumer income is one of the unfavorable changes. So demand line will be shifting to leftward. So the answer will be left. Answer will be left. Okay. So let's go to 1.13. When the proportionate increase in output is lower than proportionate increase in input, there will be increasing returns to scale. Nope. So here, let's see. So you can see like this. So this is your long run average cost. Can you remember the law of returns to scale? Long run theory. Short run is the law of diminishing marginal return, and the long run theory is about what? The law of returns to scale. So very first level, your average cost is decreasing. Average long run average cost LAC. LAC kya mokada putte? Long run average cost. It means your output proportionate is greater than the input. It's constant. It means output and input same. Here cost is increasing. See, because it's about the cost, no? Long run average cost. Your cost is increasing. It means your benefit is less. But the cost what you incur is greater. Right here, the output is greater than input. That's what your cost is decreasing because see, input is less. But here both are same, so constant. Here input is greater. Therefore, cost is greater. So now let's see again. The question is about when the proportionate increase in output is lower than the proportionate increase in output. Is that increasing returns to scale? No, it is decreasing returns to scale. Your benefits are decreasing. Right? Decreasing. So, but they said about increasing returns to scale. Increasing returns to scale kya hai? The proportionate increase in output is greater than the proportionate increase in input. Here, the proportionate increase in output is less. It should be decreasing. Decreasing returns to scale. But they said about increasing. Therefore, answer is false. Answer is false. Okay, 1.14. Marginal. Okay, the very first word is about marginal. So what is the meaning of marginal? Normally I ask at you, additional or extra. So marginal, it can be the marginal revenue, marginal production or marginal cost, marginal utility. It's about the additional because of the change in another additional. Okay, additional change because of another additional change. So it's about marginal cost. Therefore, it's about the additional cost to produce additional 1 unit. So let's see. It is the addition to the total cost as a result of production of an additional unit. Correct. Additional unit to produce the additional cost. So the answer is what? False or true? So the answer is true. It's about the marginal. Answer is true. Okay. So now other questions are about what? Write the answers for questions. Question number 1.15 to 1.20 in your answer booklet with the number assigned to the question. Write 1.15. So the questions are given, but they ask to state. So I will explain. So up to this, I think you can understand. Right, 1.15. State two characteristics of economic good. So the good means anything providing positive satisfaction, right? Anything providing positive satisfaction. So anything providing positive satisfaction, we can categorize into two. One about the economic good, another one about the non-economic good. So economic goods means what? Which are made by human effort, having opportunity cost, having production cost. Likewise, anything you are going to point it because they did not ask you to explain or briefly give nothing, state. So if they ask you to point, state, list, just you're going to directly provide the answer for the question because section A is providing each and every question 2 marks only. So don't worry about the question to explain in a big paragraph. Right? State means nicely give the answer directly to the characteristics of economic good. So what are the things you can say? Have opportunity cost, you can say. So you can say have a production cost. Man-made things. Man-made goods. They are limited because since resources are limited, through the limited resources, produced goods are also limited. So limited availability. So since it's limited, there is competition in consumption. Likewise, anything you can say. Anything you can say, only two. Competition in consumption. Anything you can say. Right? Stay two only. Okay. So 1.16, state the two characteristics of an oligopoly market. How many market types we learned? There are 4. Already I said there are 4. What are they are? It's about what? Perfect competitive market, monopoly market, monopolistic competition, and the oligopoly. So oligopoly, I said there are only few. There are only few countable. There are only few and they are powerful. So there are few powerful firms. Okay, highly interdependence. Likewise, you can state too. Oligopoly market, you can count and say who are the people. I said about media channels, newspapers, okay, and about banks, insurance companies, like how you can count and say. Okay, and the telecommunication industry. Likewise, you can, what are the business you can count and say. So example also you provide, they will give you good marks, right? So they asked about only 2 characteristics. Yes, 1.16. So you can say about 1.16, few powerful firms. Highly interdependence. Huge rivalries. What is the meaning of rivalrous? What is the meaning of rivalrous? Competition. So highly it's competitive market, right? Okay, huge rivalrous, right? So likewise, anything you can write, but related to oligopoly market. So any of these two you can write. So very easy points I am pointing out. So which you can easily can remember to mark. So stay 2. So you are going to start writing only 2. Okay, 1.17. State 2 factors affecting the money supply. So money supply, what is the meaning of money supply? Total availability of money among the people. Total availability of money among the people. So how this money supply is determined? Okay, there are 3 factors, you can write only 2. So it's about the total. Okay, it's about the net foreign assets. How much foreign assets they have in the banking system. In the banking system. So how about the domestic assets? In the banking system. And the net other assets. They can own any other assets. So accordingly, the total availability will be decided. Okay. So the money supply. Can you remember there are the types? Very narrow, narrow, broad, consolidated broad, very broad, M0, M1, M2, M2B and M4. So these are the types of money supply. So total availability of money among the people. So this is decided by how much domestic asset they have in the banking system, foreign assets and other assets. Accordingly, the money comes to the economy. The money flow to the economy. So one of these 2 you can write. It's about what? 1.17. 1.18. Briefly explain. Okay, they did not mean about explain. No, explain only you have to give some big, illustration about what is this and that. They asked you briefly. So consider about the marks given, but you, if you are a quick writer, the theory, you can write something more. Okay, so briefly explain the difference between. Now you want to think one thing carefully. If they ask you to differentiate 2 method you can follow, but which is feel easier for the question, we can apply. One differentiation is about table. One side what, another side is what. It can apply to say economic good, non-economic good, or economic resources, non-economic resources. Like whichever is easy to classify as a table, you can. Some you can say about the theory. But when you say by the theory, ensure the point, the topic is given, under that the explanation is given. Now they are asking 2 different things. No, so one is about narrow, another one is broad. So don't directly write the answer. First state narrow, state like narrow money supply. After that, write something. And broad money supply, write something. So that's the way, the pattern, how to answer the questions like this. When they ask about, briefly explain with differentiating the difference between these 2 things. Okay. So if I go for 1.18, so very first one, we are going to say about what? Narrow money supply. So narrow money supply means it's about M1. So remember, M1 means notes and coins. Notes and coins. Simply we studied about notes and coins. It's about currency held by public. So notes and coins means we can say currency held by public. And plus what? Plus what? Demand deposits in LCBs. Demand deposits in LCBs. Okay. Demand deposit, one type of deposit you can open in LCBs. Actually, there are 5 accounts you have. One is about demand deposit. So what is demand deposit? Don't confuse. You say about current account. In accounting theory, where you write the check and do the business transaction and you open the account, but you say like current account, but we never use the word current account. It's about the demand deposit. Another one, savings deposit. Normal savings, you can deposit or withdraw money at any time. Another one, time deposit. Okay, fixed deposit to the particular time period, time deposit. Another one, non-resident foreign currency account. Okay, the NRFC. And FCBU, foreign currency banking unit. These two, the last two are by the foreign currency, but demand deposit and those transactions mainly we do here. But who are dealing the international trade, they will do by the currency, foreign currency, right? But here notes and coins, currency held by public, and demand deposit, it's about the current account. So current account and notes and coins. What is the motive of holding money and doing the demand deposit? There are 3 motives we studied. Basically, these 2 are for transaction motive. Am I correct? To buy and sell the goods. That's what we keep money, and the demand deposit also, it's about the business related account. So this is the total money. Okay, dear. It is about the total money which we keep for transaction motive, which we keep for what, Amma? Transaction motive. To buy and sell. Transaction motive, which facilitating medium of exchange. Medium of exchange. So these 2 are good words to use. But something new I'm saying, please listen. So M1, it's about what? Notes and coins and demand deposit. So notes and coins, currency held by people, and demand deposit, both we keep mainly basically first for what? Buying and selling, transaction motive. That enhancing the function of money of what? Medium of exchange, right? So total money which we keep for transaction motive, which facilitating medium of exchange. So here the topic I said and I explained. Likewise, another one they asked about what? Broad money supply. So broad money supply. So broad money supply means M2. So M2 means M1 plus what? Savings deposits. Savings deposits. Time deposits in LCBs. In LCBs, okay? So M2 means M1 plus savings, deposits and time deposits. This for what purpose? Store of value. Am I correct, Amma? It's another function, okay? So, and it's for the something for emergency case. Am I correct? That's what we keep savings here and there. Precautionary. Okay, there are 3 motives. One is about transaction, another one precautionary, another one speculative. So we keep some money for here and there. We save. Precautionary. Anything emergency comes. So it helps the function of money for what? Store of value. You save money. So here you can say the total amount of money. The total amount of money we keep for what? Precautionary. That facilitates store of value. That facilitates store of value. Okay, so just go through. Including M1, no Pute, including M1. So I did not mention about M1, including M1. So here the M1 is there. M1. So the total amount of money we keep for precautionary motive that facilitate, including M1 here. Or and M1, we say and M1. Including means you can say that M1 means it's for the transaction motive, no? So and M1. And M1, better. Or you may misunderstand. And M1. So M1 plus the money which we keep for precautionary motive. Okay, M1 plus the money but we keep for precautionary motive, so which facilitating store of value. That's what I said, the total amount of money we keep for precautionary motive that facilitates store of value and M1, right? So if I say including means you may confuse, it's include here, no, and M1. So M1 plus this certain thing. So this certain thing for the precautionary motive. So M1 we are using, we keep money. People, I mean the public keep money that is held for what dear transaction motive. This savings deposit and time deposit additionally that is held for what? Precautionary motive, facilitating for store of value with M1 here. So that's how you want to differentiate. So make topic and write, and if you know the addition, just point it like this. So you may get full marks. So it's about 1.18. So 1.19. What are the determinants of price elasticity of demand? Please carefully read the question. Determinants of demand, determinants of price elasticity of demand, both are different. If they ask you determinants of demand, price of the concerned good, a price of the related good, okay dear, consumer income, taste, advertisement, cultural factor, climate factor, likewise you can say. But this is about what? Price elasticity of demand. So it's about something different, the factors. It's about the availability of substitute goods, nature of the good, the amount of income spent. Likewise, you can say any of the two. Number of alternatives, uses of the good. Accordingly, the price elasticity of demand will be determined, right? So availability of substitute, nature of the good, the amount of income spent, the number of alternative uses of the good. I explained, carefully I explained. So if you go back to my note and read it, you can understand how this price elasticity of demand comes greater than 1, less than 1. I gave the note, please go through. So it's about 1.19 or 1.20. Okay, so 1.10, 1.20, I need space. Briefly explain how to achieve the equilibrium by a firm under the perfect competition in the short run. So actually, what do you want to say? Okay, a perfect competition firm has the linear line. Okay, that for your introduction, I am saying you linear line where P equals AR equals MR, no? Putte. So what can you say? The point at which MR intersects MC, the equilibrium will be The equilibrium will be achieved by perfect competition firm because it sells homogeneous good and he is a price taker. Therefore, it is the optimum level of output to be produced. So the illustration, okay, you can say the illustration how. So deeply if you can, there are two diagrams, upward and downward you are going to draw. So this is quantity, total revenue and total cost. You know total revenue upward sloping and total cost curve like this. So anyhow, find the maximum and keep. Right, downward, another diagram you are going to draw. MR equals MC. And the dotted line, please ensure the same because we do not take any measurement, right? So there's the linear line where P equals AR equals MR. And through this point, ensure the MC curve is drawn like this. So where the MR equals MC, the equilibrium point is achieved. Likewise, you can write. Okay. See, if you know how to draw the diagram, you can give clear picture about the question, right? So how I said the point at which MR intersects MC, the equilibrium will be achieved by perfect competition firm because it sells homogeneous good and he is a price taker. Therefore, it is the optimum level of output to be produced. So this can be illustrated by the following diagram. Likewise, if you draw nicely, the well explanation is given. Easily you can score marks if you study well because this provides you 40 marks, section A. Right? So July 2023, we completed. July 2023, we completed. So we can go to January 2023 paper. January 2023 paper. So we need the space, you know. Which one of the following is the reward for land? See, the very first question is about land. Earlier one, we studied about entrepreneurship. No, so land, we provide what? Rent. So the answer is 2. We provide 2. I mean, we provide rent. Rent. 1.2. Consider the following statements with reference to the normative economic statement. Earlier, the question is regarding the positive. Am I correct, Amma? Positive, micro and macro, I said. So I said about what is micro and macro. It's in the written part I said. Here, another theory I can explain. So this is why I choose the paper. Somewhat I can tell you regarding the previous things we studied. So micro, macro, I said. Now it's about what? Positive, normative. So what is positive economics? It says about real fact. So real fact, present and past. Okay, what is happened? Past. What's happening? What could happen by the prevailing condition? Okay. So likewise, you can say the real fact, positive. But normative, it's about your idea, suggestion. So you provide some opinion. Okay, what could be happened? How it could be happened? So likewise, if you provide the opinion, it's about the normative. So they are asking you what are the or what is the correct statement. So it can be 1 or 2 or whatever. So first one, what ought to happen? Yes. So it's about the future, what ought to happen. And it's based on the value judgment. I told about it's about the ideas, opinions, or judgment of the individual. So first and second, correct. It can be examined through the fact and figures. No. Fact means what? Real fact. So real fact is about positive. You are providing the real fact. Okay. So if the real fact is taken, that is about positive. Or else it will be rejected. We accept if the real fact is approved by the economy, country, or the surrounding. So C is anyhow related to the positive. They asked about normative. So A and B is the answer. So if I am correct, number 1 is the answer for the 1.2. Okay. So according to annual report of the central bank, it's 2021. Actually, we can't do this. Okay, we can't do this because 2021 is not tested. We are going to discuss about 2022. Already I gave you the data. One can be the economic growth. Another one is the per capita income 2022. So I'm not going to do this one. It's now not needed. Which of the following is not a scenario of a zero opportunity cost? Zero opportunity cost, not a scenario. It means there should be an opportunity cost. Am I correct? So they are asking you not a scenario of zero opportunity cost. So you can't take any answer of zero. It means there is an opportunity cost. So when there is no scarcity of resources, so if the resources are unlimited in the availability, we can use without sacrificing another. So there cannot be any opportunity cost. So it has zero opportunity cost. So that's not the scenario. When there is an outcome of the production process, Anna, right? When you do the production process, when you do something producing, you are going to sacrifice the next best alternative. There is an opportunity cost. Anyhow, that's the answer. Let's see third and fourth. When resources have no alternative uses. So no alternative uses, are you going to worry about what's the next best alternative? No. So there is no opportunity cost. So zero opportunity cost. But we need which has an opportunity cost. When unemployed resources are used. So unemployed resources are used means that resources are just freely there. We are not taking for any use. So now we are taking to the use. So it means it is not given up, or we did not sacrifice anything else. But we need the answer which has an opportunity cost. No. So number 1, no opportunity cost. Third one also no opportunity cost. Fourth one also no opportunity cost. You are not going to lose anything, but you lose something in when you do the production process, when you do some production. So the second one is the answer 1.4. Number 2. Number 2. Number 5. Consider the following statements. So there are the statements given of the above. The statement or the statements which incorrectly explain or explains the market equilibrium is or are. So first we will find what are the conditions for market equilibrium, which are related to market equilibrium, we will take out. Then the answer will come. Quantity demanded equals quantity supplied, yes. Expectation of buyers and sellers that operate in the competitive market match, yes. How? There's the quantity and the price downward sloping demand line, upward sloping supply line. So this is the point, equilibrium point. So match. So both parties in the market match. There is an excess demand or supply. So when both parties meet here, your quantity demand equals quantity supply. So can you see any excess or shortage? No. So C is the answer wrong. I mean the wrong one, incorrect one. There is no tendency for price to change. Yes, because in a equilibrium level, they are in the both equilibrium level. So there is no any tendency for price change because they are in the same point. So C is the answer because there is an excess demand and supply. You can't say there is an excess demand because QD equals QS. Both quantity equal each other. So the answer is C because it explains incorrect about market equilibrium. So C is the answer, means number 1 is the answer. Okay. 1.6. Right. Another mathematical part is given. But here it's about cross elasticity. Previous paper, cross elasticity, positive means what? Negative means what? Zero means what? I explained you. Here let's find out what is the answer, because they are saying when the price of the commodity Y increases from 75 to 125, the quantity demanded of commodity X decreases from 4,000 to 2,500 if X and Y are complementary good. They are saying complementary. So complementary, can you find the answer in plus? No, definitely the answer comes in minus. So that's how you can take out the wrong things. The cross price elasticity of demand commodity X and Y would be how much? Okay, so we can do the next part here. So cross elasticity of demand. First, this is how the way you can remember. You know the formula for the price elasticity of demand, right? The point elasticity. So normally, right, the way how the price elasticity of demand is given. Delta QD over delta P into P over QD. And after that, what's demand, what's price given, we can mention. So the price is given for Y. Demand is given for X. So like how you can easily do the thing under the cross elasticity of demand, right? First try the normal thing. Delta QD over delta P into P over XD, but here P for a Y good, QD for a X good, right? So now delta QD, what is the change? But it is the change in the demand 4,000 to 2,500. So decreasing 1,500. Price increases. So there's the change by 50 if I am correct. Then the particular price, the first price is 75. And its quantity demanded becomes the first quantity demanded. I mean, it's demand, actually it's demand. When we will compare one good with another good. So the certain good, if you take the certain good only, we say price and its quantity demanded. So when you compare the two different goods, one good price and another good demand. Okay, but anyhow, remember it's quantity demanded. We can't say it because it's another good. So when one price is taken, another good demand. But The formula we can use as QD, no problem. But when we say demand, right? So demand of X and price of Y. So here the price of Y 75 and at the time the demand is how much, darling? 4,000. So let's find out what's the answer. But anyhow, the answer comes in minus. So all the plus answer we can take out. So if you calculate 0.5625, is there any answer with this? Yes. 0.5625 minus. So minus means there are two answers given. See. So be careful when you learn about the theory regarding the cross elasticity. Positive substitute goods. Negative complementary goods. Zero non-related goods. So here complementary, you want to make sure it's about the minus. So first one you can't take out because the answer is plus. We need answer in minus. So second one is the answer for 1.6. Second one is the answer. Right. So we can go to 1.7. Of the following, which initiative will safeguard the local paddy farmers? Right. So according, given options, maximum and minimum. Okay. So remember, there are the certain strategies used by government to intervene the market. One is imposing price control. Under that maximum price control, another one is minimum price control. So these are the strategies how the government intervenes the market. One is price control. Another one imposing tax, providing subsidies and price stabilization. So price control policy, you have two, maximum price control and minimum price control. Remember, maximum price control is implemented by government to protect consumers in the market. Okay, dear consumers, have you seen whatever the goods you purchase with M.R.P, MRP, maximum retail price? So no any seller can ask you additional cent from you. MRP, maximum. Maximum means no one can go beyond the level. If supply is willing to give for the discounted price, yes, of course. Maximum means you can't go beyond the level, but you can decrease the price if you wish. That is maximum. That is used to protect the consumers. In order to protect the producers, minimum price control is imposed by government. This is the price at least to be given for them. Minimum. Okay, at least to be given. So paddy field, it's about the farmers. They don't know. They are not capable to demand for a price in the market. Therefore, they are to be protected. So farmers especially. So minimum, this is the minimum price should be given for them. So paddy farmers, it's about the local paddy farmers. So the answer will be minimum price control because we want to protect them. So minimum price control on paddy. So it's about the number 2. Okay. So we can initiative with imposing minimum price control because we can't impose tax or we can't provide a subsidy for the imported rice variety. It means we are encouraging the imports. Then how we can protect the local farmers? See, subsidy is also another way you can, support, assist the local paddy field people. But here they said the subsidy is given for the importing. So imported rice, if you give subsidies, the import will be increasing. Then paddy field, here the people who are doing domestically, they will suffer. But they are asking, what is the way to safeguard? So you can't take the fourth answer. But if they say subsidy for the local paddy field people, yes, of course, that can be the answer. But this is given for the imported rice variety. It means we are encouraging the importers. So that cannot be the safeguard method. So number 2 is the answer for 1.7. Okay, 1.7. Number 2 is the answer. Right? Which one of the following is not a factor which results in increasing returns to scale? Increasing returns to scale means, already I explained you, where the proportionate increase in output is greater than the proportionate increase in input. So with less amount of input, you can produce more. That's what returns are increasing. Increasing returns. Returns, another word is what? Benefits. What is the meaning of scale? The size of the business. So the business is getting increasing benefits. So not the factor. Issues in management. Very first one becomes the answer. Why? Issues in management, can you increase the benefits? No. Indivisibility of factors of production, it means the factors are specialized. So if the factors are specialized, they are expert in doing the particular product. So the benefits will be increasing to the business. Use of the technologically advanced machines, yes, that's another reason for increasing. Presence of expenses that must be incurred only one. So large things you are incurring one time and the benefits will be taken in the future years. So anyhow, the first one is the answer. Issues in management, because it is not a factor which result in increasing, because that's the factor for decreasing. Issues in management, breakdowns, okay, not unity among the laborers. Okay, so likewise, any problem comes, you cannot gain any benefits from the business scale. That's about the decreasing. But they asked about increasing and not a factor. So not a factor means it's in the opposite side. So very first one is the answer, issues in management. So number 1 is the answer for 1.8. 1.8, number 1 is the answer. Right? So we can move to 1.9. Which one of the following is not? See, the bold letter is given not, or sometimes incorrectly or correctly. Find the correct one, incorrect one. Likewise, the letters, I mean the word, including the letters, the word given in the bold, right? So you can see how the question is asked. Carefully answer the questions. Okay, they are asking not correct, not. So which one of the following is not correct with respect to a firm operates in a perfect competitive market? So it is not related to the perfect competitive market. So it's about the not. Any firm can make economic profit and continue to operate in the market. Yes, economic profit can be there. It can make normal profit in the long run. I said short run, there are the chances for earning abnormal profit, normal profit, or suffering loss. But in the long run, it earns only normal profit. So it's correct. There are barriers to exist from the market. Did we learn like that? There are barriers. No, full freedom is given. Anytime, at any place, any person can start up the business, and at any time he can wind up the business. No one can ask. Okay, so here, there are barriers is not the correct statement related to the perfect competitive firm. Anyhow, the fourth one, let's check. It produces homogeneous product. Yes. So it's about the same, similar goods, identical good. I said about the vegetable market, like the carrot I said. So you can't differentiate the product. So homogeneous is also the correct answer. So we need the incorrect one. Third one is the answer for 1.9. So 1.9, third one is the answer. So now go to 1.10, the period from the trough. It's not the tough or a through or whatever, it's trough. Okay, so that's another new word you learned in economics. So it's about the business cycle. So you can remember the graph like this. So there's the potential output, no, Pute? Potential output. So potential output means what you can achieve, what's your dream, what you can achieve. So now for an example, what did you think before starting a AAT? The same example I use, you dreamt easily. We can complete AAT 1, AAT 2, AAT 3. After that, chartered or SIMA or ACA. Oh, we can go to the university, good job. Likewise, you dreamed very well. Okay, so your dream is going smoothly, but is really working like that? Is it really going like that? No, you will face many up and downs and go. That's the actual output. So actual output fluctuate. But this is your potential, what you can achieve, what's your dream. Okay, what you can achieve. But actual, somewhere you struggle and you stop and you think, you cry, and later on, slowly, you go up. So a cycle, again and again it occurs. So from this, there are 4 stages explained. Each cycle, the highest point is peak. Peak, any of here. Each cycle, the highest is peak. The least point becomes trough. So here you can plot anything as the peak, anything peak here. So this, for one example, I will say this is peak and these are also peak, right? The least points are known as trough. So the sudden fluctuation is known as recession, sudden drop. But from the trough again you come up, expansion, or you can say recovery. You can say recovery. So how the cycle works? Peak, recession, trough, expansion, peak, recession, trough, expansion. Likewise, up and down with the many struggles, your actual will be improved. So if your struggle moving upward, so up and down, you're moving upward. So you see, if it moves upward, in future, it goes to economic growth. So you struggle with peak, recession, trough, recovery, peak, recession, trough, recovery, like you struggle. But if the struggle pattern moving upward, it says about economic growth. If the struggling says about declining pattern, economic degrowth. So upward movement about economic growth in the future, long-term continuous improvement, no? So long-term continuous decrease of the productivity is about what? Economic degrowth. So you can forecast the future by this business cycle. So the cycle says about whether you go to economic growth or whether you go to economic degrowth, downward or upward. So now let's see what's the question given here. The period from the trough to peak. Trough to peak. What is the answer? Expansion. Given the answer. So expansion is about what? Number 2. Answer is number 2. So 1.10, if the cross elasticity of demand. See how many times cross elasticity. Likewise, remember there are the types in price elasticity of demand also. Please study hard and go. There are 5 types of price elasticity demand also. PD1 0, sorry, PD 0, less than 1, equals 1, greater than 1, infinity. But there are the wordings given. Likewise, income elasticity of demand, cross elasticity of demand, and the price elasticity of supply also we have other 5 types. So please remember, any of this can be tested. So frequently the questions are given with elasticity. Okay. So here, if the cross elasticity of demand is blank, the goods are considered as a substitute. I told you, substitute goods are with positive relationship, whereas complementary goods are with negative relationship. 0 means non-related good. So it's about the substitute good which provides positive. So answer, fill in the blanks, positive. 1.11, positive. Positive. A blank firm makes normal profit only in a long run. So here 2 things, but you can escape from one, monopoly. So what is monopoly? So monopoly about a single seller in the market, he is the king. So he decides the price. Will he decide the price to suffer loss? No, all the time abnormal profit. Therefore, monopolistic competitive will be the answer. How you can lower the risk of selecting the wrong answer, I said. But anyhow, monopolistic competitive also, I said. Same scenario like perfect competition market. Okay, the firm in this market enjoy supernormal profit or a normal profit or suffer loss in short run. But in the long run, it earns only normal profit. Then the answer for 1.12 is about monopolistic competition. Monopolistic competition. Right. Now, true or false? Aggregate of currency held by public. So, held by public is about what? Notes and coins plus demand deposit. It's about what? Broad money supply? No, narrow money supply. Again, I say M0, M1, M2, M2B, M4. So it's about very narrow. Narrow. I mean very narrow money supply, broad money supply, consolidated broad money supply, and very broad money supply. So very narrow, it's about notes and coins. Notes and coins. I mean currency held by public. So notes and coins with demand deposit, narrow money supply. So M1 with savings deposit and time deposit in LCBs. Licensed commercial banks, broad money supply. M1 means what? Narrow. So narrow ke anne currency held by public and demand deposit in LCBs. Further, savings deposit and time deposit in LCBs are considered in the broad. Now M2B means M2 plus 50% of NRFC, non-resident foreign currency, and a foreign currency banking unit, FCBU, in LCBs. Why this is 50%? Non-resident, who are foreigners. Foreigners, we can't make sure all the time they stay here. They might fly. So 50% of the currency considered from the non-resident foreign currency, but FCBU account is the foreign currency banking unit opened by resident people. So 100% they are resident, they are Sri Lankan. So that money totally we can get. But non-resident who are the foreigners, only 50%, average only considered. So M2B. M4, M2B plus. Now we took only LCBs. Now first we considered the LCBs. There are other two institutions where you can open up savings deposit and time deposit. SD means savings deposit. TD means time deposit. Okay, savings deposit and time deposit in licensed specialized banks where you can save money. Licensed specialized bank and licensed financial companies. Finance companies. Okay. So this you have to remember accordingly. Currency held by public and demand deposit. Currency held by public and demand deposit about narrow money supply, but they mentioned about broad money supply. Therefore, answer is false. 1.13 false. So 1.14, economic system is a set of principles established to solve the fundamental problem. Yes, economic system is, it is created, prepared, or it is developed by the people, set of people to solve the economic problems. Yes, it's correct, economic system. Okay, market economic system or planned economic system or whatever the system, it is the set of principles established by group of people to solve what a fundamental problem. So the answer is correct, true. True. So we did the MCQs, fill in the blanks, and two true or false one. So till 1.14 we did. So it's time to go for the written answer one. So I'm going to raise. I think you got something from this explanation part. Briefly explain the difference between micro and macro. See, again, they're asking about micro and macro. So I told you there are two methods. One is table or the definition one. So which is easier for this? The definition one is easier. So one set we are going to say for micro, another topic is about what dear macro. So each carrying one mark, like they can provide you 2 marks for this because it's about briefly, right? MCQs, the section A, MCQs, fill in the blanks, true or false with this short answered questions are given each with 2 marks, total 40 marks. So please concentrate on gain these 40 marks so you can close to the level to pass, right? So how can you start writing about 1.15? So one is about the micro. So what is microeconomics? We can say it is known as the study of an economy without dividing into number of parts. So example, better you can write 2 examples like theory of demand, theory of supply, like you can say. See, the topic only I explained with example. Another one is about what? Macro. So it is known as the study of as whole, right? Okay. Entire economy is taken without dividing. You can say the national level phenomena. Anything about the national level phenomena you can take regarding the interest rate or employment rate. Anything you can take. So see how nicely it is given. The topic and the explanation example, the topic explanation with example. So you can write like this, so micro and macro. What is this? So it is known as the study of an economy without dividing it into number of parts, right? So theory of demand and supply, and macro, the study of an economy as whole without dividing it, interest rate, employment rate, inflation rate, okay, national income, national production. So you can take anything else, but according to the national level phenomena, occurrences, right? You can take. I think you understood how to answer the micro and macro. Now, what's the 1.16? Explain briefly the income effect which results in the inverse relationship between price and quantity demanded. There are two reasons basically for a inverse relationship between price and quantity demanded. One is the income effect, another one is substitution effect, right? So income effect and substitution effect. So these are the main two reasons for inverse relationship between price and quantity demanded. Okay, so how it can be illustrated? So then answer number 1.16. Okay, how you can start writing? You can say during the given period of time, while all other factors, so during the given period of time, while all other factors affecting the demand remain constant, including consumer income, including the amount of consumer income. Here, no any factor and the other factors changing. They remain constant, right? Okay, so they remain constant. So including the amount of consumer income level. Okay, so during the given period of time, while all other factors affecting the demand remain constant, including the amount of consumer income level, if the price of concerned good, increases, okay, increases, so price of the particular product increases. At that time, even consumer income level is not changing, the same amount of money he has. At that time, price is increasing. Then the purchasing power of the consumer decreases. Therefore, quantity demanded will be decreased. And vice versa. What is vice versa? Opposite side. So regarding what? So we said about increases, no? If decreases means purchasing power increases and the quantity demanded will be increases. This is how you are going to briefly explain about the income effect of the income effect, which says about inverse relationship between price and quantity demanded. That's how, see how nicely we can write it. But these points are compulsory. Then only you can get direct marks for this question if the answer is given properly. Right? 1.16. Yeah. Explain briefly the difference between choice and opportunity cost. This one I'm not going to write it, but anyhow, I said another series we are going to do it at the time. I will explain you what is scarcity, what is choice and opportunity cost. But this time we will just go through what is choice and opportunity cost, right? So you know there are limited resources in the economy. So when there are limited resources in the economy, human wants are unlimited. Then there is a gap between limited resources and unlimited resources. So it is about scarcity, shortage in the availability of resources to fulfill the unlimited human wants. So further, the resources have alternative uses. Resources are limited and they have alternative uses. Then we want to select the best alternative. So when we select the best alternative, it is about choice. Scarcity means what? The shortage in the availability of resources. Scarcity, we said about shortage. Choice is about selecting the best at the time. You sacrifice, you give up another best alternative, next best alternative. That is about what? Opportunity cost. So this how you can explain choice and opportunity cost. Selecting the best among the different alternative is about choice, while the best is selected, the value of next best alternative is forgone is about what? Opportunity cost. So choice means what? Opportunity cost means what? We can write it, but anyhow I will discuss this later with you all. Right? Then 1.18, two main functions of central bank. Two main functions of central bank. So my dear students, okay, my dear students, central bank, there are the objectives, there are the functions. There are two objectives: ensuring price and economic stability and ensuring financial system stability. These are two objectives. Okay, ensuring price and economic stability and ensuring financial system stability. These two are objectives. Now they asked about what are the functions, what they do. What they do? They issue currencies. Am I correct, Amma? They issue currencies. They conduct monetary policy. Okay, foreign exchange control system, banker and advisor to the government, banker and advisor to the government, okay, and advisor to the commercial bank, okay, assisting the commercial bank, right? Likewise, any of the function you write, only two, because they said about state. Okay, so don't confuse with objectives and the functions. There are two objectives only: price and economic stability and financial system stability. But there are many co-functions. You can see in my tute, many of the functions are given. Any of two can be written. Currency issues, okay, banker and advisor to the government, supervisor or to the commercial bank, control of foreign exchange system, conducting the monetary policy, fiscal policy. Likewise, anything you can write under the functions of central bank. Okay. So what is an indifference curve? They asked you about indifference curve. Okay, they asked about indifference curve. So what you can say? An indifference curve. So the question number is what? 1.19. Is the graph analysis. Okay, an indifference curve is the graph analysis which illustrates the different combination of two goods during the given period of time. Along the indifference curve, the utility, what is utility? Satisfaction, right? The utility remains constant. Right? But if it shifts upward, satisfaction increases. And shifts downward, satisfaction decreases. That's all, enough. Satisfaction decreases. See? So an indifference curve is the graph analysis which illustrates the different combination of two goods during the given period of time. Along the indifference curve, the utility remains constant, but if it shifts upward, satisfaction increases, and shift downward, satisfaction decreases. That's all, enough for the what is an indifference curve. Okay, indifference curve. So we discussed about micro and macro, what is an inverse relationship, choice and opportunity cost, what are the two main functions of central bank, what is an indifference curve, and last thing, it's about briefly explaining what is sustainable development. Listen, what is sustainable development? Before that, economic growth. What is economic growth? It is continuous improvement in the productivity level. What is economic growth? It is the continuous improvement in the productivity level. Economic growth. Along with economic growth, social and environment are also improved. It is about economic development. So economic growth means what? Continuously improvement in the productivity. Along with continuous improvement in the productivity, qualitative wise also, if your economy is improved regarding the social and environment, economic development. While development process is taken place, okay, while economic development process is taken place, ensuring you do the economic development without compromising future generation consumption activity. Okay, dear. It means simply you are not going to use all the resources available in the economy to develop. So resources are limited. If you use all the limited resources now, you are highly good, improved, developed. Now you are good, present. But the future generation, they do not have the resources to continue this, to maintain this development activity. So what is sustainable development? It is ensuring you keep resources for the future generation. Okay, so we successfully discussed and completed, and time also planned correctly. So we did July 2023 and January 2023 section A. It's about MCQs, fill in the blanks, true or false, and short answered questions. I think you understood clearly what I explained. Okay, so bye and study well and keep confident that you can pass the exam. Okay, so meet you in the next session. Bye.